Welcome back to the Babalian Money Show, your go-to channel for making sense of the financial world. It feels like everywhere you look these days, there's another headline screaming about a market downturn, a recession, or the dreaded bear market. It's enough to make even the most seasoned investor nervous. But what if I told you that bear markets aren't just something to survive, but an opportunity to thrive? In today's deep dive, I'm going to share with you the exact strategies you need to not only protect your portfolio, but to actually set yourself up for massive long-term success. We'll cut through the noise and focus on what truly matters. By the end of this video, you'll have a clear, actionable plan to navigate this bear market with confidence. Before we dive in, a quick but important disclaimer. I am not a financial advisor, and this video is for educational and entertainment purposes only. Please do your own research and consult with a professional before making any investment decisions. Your financial situation is unique, and it's crucial to make choices that are right for you. All right, let's get into it. First things first, what exactly is a bear market? Technically, it's defined as a market decline of 20% or more from recent highs. But for most of us, it is that gut-wrenching feeling we get when we look at our portfolio and see a sea of red. The first rule of surviving a bear market is simple, but it's the hardest to follow. Don't panic. Panic selling is the #1 wealth destroyer. When you sell in a panic, you lock in your losses and miss out on the eventual recovery. Remember, the market has always recovered from every single downturn in history. It's a cycle. Your emotions are your biggest enemy right now, not the market itself. So, take a deep breath. Stop checking your portfolio every 5 minutes. It's like poking a bruise. It's not going to help it heal any faster. Now, let's talk strategy. The second key to surviving is to reassess, not react. This is the perfect time to review your financial goals and your risk tolerance. Are you still comfortable with the level of risk in your portfolio? Are your long-term goals still the same? For most long-term investors, the answer should be yes. If you're investing for retirement in 20 or 30 years, this downturn is just a blip on the radar. It feels huge now, but in the grand scheme of your investment journey, it's a small valley before the next peak. If you find your portfolio is too aggressive for your comfort level, don't make drastic changes. Instead, consider a slight rebalance. Maybe shift a small percentage from your higher risk assets into more stable ones. But again, do this calmly and with a clear plan, not as a knee-jerk reaction to a scary headline. This brings me to my third and perhaps most powerful strategy: embrace the opportunity. I know it sounds counterintuitive, but bear markets are when future millionaires are made. Think of it this way: everything is on sale. High-quality, fundamentally strong companies are now trading at a discount. If you believed in a company at its all-time high, why wouldn't you love it even more at a 30%, 40%, or even 50% discount? This is where a strategy called dollar-cost averaging, or DCA, becomes your best friend. DCA means investing a fixed amount of money at regular intervals, regardless of the market's price. So, you might invest $500 every month. When the market is down, your $500 buys more shares. When the market is up, it buys fewer. Over time, this averages out your purchase price and significantly reduces the risk of buying everything at a market peak. Continuing to invest during a downturn is a powerful wealth-building tool. It takes discipline, but the payoff can be enormous when the market inevitably recovers. So, where should you be looking to invest? Focus on quality. Look for companies with strong balance sheets, low debt, consistent cash flow, and a durable competitive advantage, what Warren Buffett calls a moat. These are the businesses that can weather an economic storm. Think about sectors that are essential, regardless of the economy. Healthcare, consumer staples companies that sell things people need, not just want, and certain technology companies with recurring revenue models are often more resilient. Avoid highly speculative, unprofitable companies. In a bull market, anything can go up. In a bear market, quality is what survives and ultimately thrives. Do your research. Read annual reports. Understand the business you're buying into. Don't just buy a stock because it's down a lot. Buy it because it's a great business that's temporarily on sale. Another crucial component of your bear market survival kit is cash. Having a cash reserve is not just for emergencies. It's your opportunity fund. When the market presents an incredible buying opportunity, you need to have the dry powder ready to deploy. It gives you flexibility and control. During a downturn, you might see a fantastic company's stock get unfairly punished, dropping to a price you never thought you'd see. Having cash on hand allows you to take advantage of that fear and volatility. How much cash should you hold? It depends on your personal situation, your risk tolerance, and your job security. A good starting point is to have enough to cover 6 months of living expenses. And on top of that, a separate stash dedicated to investing when opportunities arise. This way, you're not forced to sell other investments at a loss to buy something new. Let's also talk about strengthening your personal finances, because your investment portfolio is only one piece of the puzzle. A bear market often goes hand in hand with economic uncertainty. Now is the time to get your financial house in order. Build up that emergency fund we just talked about. Pay down high-interest debt like credit cards. This is like getting a guaranteed risk-free return on your money. Cutting back on unnecessary expenses is also a smart move. Review your subscriptions, eating out habits, and other discretionary spending. Every dollar you save is a dollar you can put toward your financial security or your investment goals. Having a solid personal financial foundation will give you the peace of mind to stick with your investment plan, even when things look bleak. You'll be less likely to make emotional decisions if you know your day-to-day life is secure. Finally, and this is so important, manage your mindset. Stay informed, but don't get consumed by the 24/7 news cycle of fear and negativity. Limit your exposure to financial news. Maybe check the markets once a day, or even once a week. Instead, spend that time reading books from legendary investors like Warren Buffett, Peter Lynch, or Benjamin Graham. Their wisdom is timeless and provides incredible perspective during turbulent times. You'll all quickly realize that these market cycles are normal and that patience and discipline are the true keys to long-term success. Remember your why. Why are you investing in the first place? Is it for financial freedom, for your family's future, for a comfortable retirement? Keep that long-term vision in mind. It will act as your North Star, guiding you through the temporary storm. To recap our bear market survival guide: 1. Don't panic sell. Control your emotions. 2. Reassess your goals and your portfolio, but don't make drastic reactive changes. 3. Embrace the opportunity. Continue investing through dollar-cost averaging, especially in high-quality companies. 4. Focus on quality businesses with strong fundamentals that can withstand a recession. 5. Maintain a cash position for both security and opportunity. 6. Strengthen your personal finances by building your emergency fund and paying down debt. And 7. Manage your mindset. Stay educated, stay positive, and keep your long-term goals in focus. Navigating a bear market is a test of an investor's character. It's not easy, but by following these principles, you can not only protect your capital, but position yourself for incredible growth on the other side. This is where real wealth is built. It's not in the euphoric highs of a bull run, but in the disciplined, strategic actions taken during the pessimistic lows. Thank you so much for watching. I hope you found this guide helpful and that it gives you the confidence to face this market head-on. If you got any value from this video, please do me a huge favor and hit that like button. It really helps the channel out. And if you want more content like this to help you build wealth and navigate the markets, make sure you subscribe to the Babalian Money Show and turn on notifications so you never miss an update. Thanks again for tuning in, and I'll see you in the next video.